Friends, in today's video, we will discuss three small cap funds that have generated more than 40% CAGR returns for their investors in the last 5 years. We will also find out how much a rupees 10 lakh investment made in any of these funds would have grown in just 5 years. Along with that, we will also understand what strategy these funds have followed, which enabled them to generate such high returns over the past 5 years. The very first fund on this list is Quant Small Cap Fund, which has delivered a CAGR of 50.57% over the last 5 years, which is a very high return for any mutual fund over a 5-year time period. And this is the reason why this mutual fund is ranked number one in its category over the past 5 years. If an investor had invested rupees 10 lakhs in this mutual fund 5 years ago, then his investment would have grown to 67.56 lakhs today, which is more than 6 times the original amount. Such astronomical returns in just 5 years can only be achieved through mutual fund investments, and that too when you invest in equity mutual funds, more specifically in small cap funds. Now, if we talk about the positive points of this fund, the first one is that its performance has been excellent across all time frames. Only in the past 1 year, its performance has been below average. That is mainly due to the controversy of front running surrounding the Quant Mutual Fund house, which forced Quant Small Cap Fund also to make some changes in its investment strategy. It has to become overweight in large cap stocks to cope with the possible redemption pressure, which led to underperformance over the 1 year time frame. However, if you look at its performance in near term, that is in 1 week, 1 month, 3 months, or 6 months, its performance shows improvement. In fact, it has already started to outperform its category averages again in near term. Also, if you look at its entire performance history from 1 year to 10 years, it has consistently outperformed the category averages. The only exception is the 1 year performance. But that too could be seen as positive for investors, especially if you are a prudent investor, because you are getting an opportunity to enter this excellent fund at a lower NAV. A smart investor always grabs such opportunities. As for the negatives of Quant Small Cap Fund, they are already have been discussed, namely that its 1 year performance is below the category average and it faced front-running allegations, which caused disruption in its strategy, affecting its 1 year returns negative. Now, if we talk about the investment strategy of Quant Small Cap Fund, it follows an aggressive investment strategy known as growth investment strategy. The characteristic of such a strategy is that these funds do not diversify too much, keep their portfolio limited to a few stocks, and invest in high PE stocks, which have higher growth potential. Apart from this, even within that concentrated portfolio, such funds focus more on a few stocks, usually the top 5 to 10 stocks. So if there is any positive movement in these stocks, the fund's NAV witnesses a significant improvement. However, this can also turn into a negative sometimes, because if these few stocks decline due to whatsoever unfavorable developments, the fund's NAV also gets hit significantly. But in the long term, it has been observed that such funds, those with concentrated portfolios and investment in high PE growth stocks, generally perform better than funds that follow a value investment strategy. In the short term, you may see a lot of volatility in the NAV of such funds. However, if you are a long-term investor, someone looking to invest for 5 years, 7 years or 10 years, then it is beneficial to go with such funds that follow an aggressive investment strategy. The second fund in this list is Nippon India Small Cap Fund. This fund has generated a CAGR return of 42.26% in the past 5 years for its investors. If we talk in absolute terms, that is, if an investor had invested rupees 10 lakh in this fund 5 years ago, then today the value of that investment would have grown to rupees 48.38 lakhs, which is approximately 5 times. In the last 5 years, the rank of Nippon India Small Cap Fund in a small cap fund category is second. Now let us discuss the positives of this fund. The fund has performed very well in every time frame from 1 year to 10 years, and in all time frames it has outperformed the category average, and therefore investors can rely on this fund for long term investment. If we talk about the negatives, the biggest negative in this fund is its very high AUM. which has crossed rupees 58,000 crores. As you might be aware that having too high an AUM is not desirable for mutual funds belonging to small cap fund category, as it becomes increasingly difficult to deploy the large amount of funds in buying only a few high growth stocks. And as a result, Nippon India Small Cap Fund has also had to adjust its investment strategies. Earlier, this fund used to follow a growth investment strategy. It still does, but now it has diluted that strategy a bit and increased the number of shares it holds in its portfolio. As when you have such a large AUM to deploy, you cannot keep your portfolio concentrated in very few stocks. You are forced to diversify more. At present, there are 229 shares in this fund's portfolio, while the category average is only 85. These shares are also of companies whose market cap is more than the category average. As while the category average is only 11,038 crores, whereas the shares in which Nippon India Small Cap Fund has invested have an average market cap of 22,600 crores. So you can see that there is a difference of almost double. And as you might be aware, the more you invest in larger cap stocks, the more your returns get diluted. As smaller the company, the higher the growth potential it has. And on the other hand, the bigger the company, the lower the growth potential compared to a smaller cap company. Along with this, the fund has to increase its investment in large cap category shares. The third fund in this list is the Bandhan Small Cap Fund. The Bandhan Small Cap Fund has been launched only 5 years ago, whereas the first two funds in this list, the Nippon India Small Cap Fund and Quant Small Cap Fund, have been launched more than 10 years ago. Now, even in this short time of 5 years, this fund has performed exceedingly well and has outperformed the category averages in every time frame from 1 to 5 years. There has not been a single time frame in which it didn't outperform its category averages. Along with this, it has also consistently stayed at the first, second, or third position in the small cap fund category during these 5 years. Another positive with this fund is that there has been no controversy associated with this fund, whereas both the earlier discussed fund, the Quant Small Cap Fund and the Nippon India Small Cap Fund, have been subject to controversies, due to which their performances have also been got affected negatively. The return this fund has generated in 5 years is 40.19% CAGR, which means that if an investor had invested rupees 10 lakhs in this fund 5 years ago, then that would have grown to rupees 44.25 lakhs by now. If we talk about the positives of this fund, it has outperformed the category averages in every time frame, whether short term or long term, and even in very short time frames such as 1 week, 1 month, 3 months, 6 months, etc. It is outperforming the category averages. Another positive of this fund is that its expense ratio is quite low. It is just 0.39%, whereas the category average is 0.65%, which is a significant advantage for its investors. Apart from this, it is a highly diversified fund that follows a value investment strategy. Because of this, Bandhan Small Cap Fund is an excellent choice for investors who don't want to experience much volatility in the NAV of their fund and yet want to get high returns by investing in a small cap mutual fund. So for such investors, a low risk, low volatility, highly diversified fund that also generates good returns is available for investment in the form of Bandhan Small Cap Fund. If we talk about the negatives of this fund, no negative is visible because its performance is also good. It has no controversy surrounded with it, and in every time frame it is outperforming its category averages. Further, its rank has also been number 1, 2 or 3 in every time frame in the small cap fund category. Talking about the fund's investment strategy, it follows a defensive value investment strategy, and this is the reason why this fund is highly diversified fund. And that is why this fund has invested in 185 shares, whereas the category average is only 85.